Hello, everybody. It is the Money Lady here, Cherie. Y'all like my headband? Yes, yes, it is officially Thanksgiving tomorrow. So happy Thanksgiving to everybody. Today's topic is all about affordable home ownership in 2026. That has, of course, become a buzzword in the media, but we've been talking about affordable ownership for a while with regards to just like people on the ground wanting to be able to purchase a home, feeling like the prices are going up, up, up. And how are you able to get into your first home? Well, that's going to be the conversation today. So, a couple of things that we're going to talk about today. We're going to talk about uh, the housing bubble and why it's not going to happen. We're going to talk about the three levers of home ownership, the three costs, quote unquote, that we have. And I'm just going to give you a lot of advice with regards to down payment assistance and things like that. So, buckle up, take some notes. So let's talk a little bit about the housing bubble. And the housing bubble isn't coming. So it may come in little pockets across the United States, but overall, the this is not 2008 where we had like a lot of housing inventory and, you know, the world was going crazy with regards to the economy and things like that. Even though the economy is sluggish right now, the inventory is really low. People have been in their houses for a while. They've got 2-3% interest rates. If they do run into financial trouble, they're still able to, for the most part, put their properties on the market and get them sold. One third of properties that are being purchased these days are being purchased by investors. And you may think, oh, it's like the big BlackRock investors. No, the supermajority of people purchasing homes are actually mom and pop investors. So I just want to let you know right now, unless you live in certain parts of the country, the housing bubble is not coming. So let's talk about the three affordability levers that nobody teaches you. This is where you want to get your pen and paper. So the three affordability levers that we're going to talk about today are down payment, closing cost, and monthly payment. Those are the three big costs that we have. And I'm going to talk to you about how you can reduce all three of those costs. So the first thing is there's still a myth out there that you have to put 20% down in order to purchase a home. That's actually not true. You are able to put down as little as 0% if you're buying in a rural area that is USDA, or if you are a veteran or active military and you have a VA loan. The next level up, if you're a first time home buyer, is actually 3% minimum if you are getting a conventional loan. And then 3.5% for people who are getting an FHA loan. So I do have a lot of people who will contact me and say, hey, Cherie, I have to get a 3.5% down payment. And when I ask them why, they will say, because that's the lowest down payment that's available to me. So the truth is that's not the truth. You can get zero down payment options. Yes, absolutely. Depending on where you want to live, right? You can get low down payment options, including 3% down for a conventional loan. And you can also get down payment assistance. So every municipality, every state has a down payment assistance program. There are also national down payment assistance programs as well. So I have helped people basically um, get grants that have paid their down payment assistance. All right. So when you're working with a lender, if that is something that is of concern to you, you do want to ask about the down payment assistance options that are available to you. Sometimes the down payment assistance programs do require you to take it's like a financial literacy course. It's like a home ownership course. So you do want to be aware of that. And then sometimes with the down payment assistance program, sometimes those programs do have slightly higher interest rates than if you were to be able to pay for your down payment assistance out of pocket from savings, from a gift from a relative, from your 401k, things like that. So there are some cons to some of the down payment assistance programs. Also, some of the down payment assistance programs are what's called forgivable, and some of the programs are repayable. Repayable programs means just what I'm saying. You're going to have to repay it back. Sometimes you have to repay the program back every month, and it's a part of your monthly mortgage payment. And then sometimes they will say, if you sell this house in the next 30 years, if you refinance this house in the next 30 years, or if you transfer this house in the next 30 years, we're going to get our money back. So, what does that mean for you? That means that if you purchase a house with a repayable down payment assistance program, and you decide you want to refinance because the rates go down to 3%, you're going to have enough equity in order to repay that down payment. So again, with with down payments, because that's one of the first levers of um, affordable home ownership, there are ways for you to get in with zero down or very little down. So that's number one. Okay, so the second lever of affordable home ownership are closing costs. What are closing costs? Closing costs are things that you have to bring, money that you have to bring to the closing table in order for them to give you the keys, basically. So, the acronym that I was taught when I was first starting as a mortgage loan officer is DELTA, like the airlines, right? DELTA stands for down payment, escrow, lender fees, title fees, and appraisal. And sometimes we'll add another A for anything else. But these are your overall closing costs. So closing costs are typically 2% to 5% of the purchase price. And depending on where you live, closing costs can potentially be expensive. Um, for example, in Maryland, where I live, the transfer taxes here are very expensive. There are other places where the transfer taxes are expensive as well. So you will want to work with a lender in order to figure out how much cash you have to bring to the closing table so that they'll give you the keys, right? But we're talking about affordable home ownership now. So, what can you do, you and your realtor and your lender do to lower the amount of cash you have to bring to the closing table? Well, what you can do is your realtor may be able to negotiate seller credits for you. What are seller credits? Seller credits is basically money that the seller gives to you so that you will purchase the house. Now, does every property offer seller credits? The answer is no. Typically, you get seller credits from a seller if their property has been sitting on the market for a while. And usually, if you're the only person with an offer that you're giving to them. Okay. So, when we talk about affordable home ownership, if you're looking at a property that has 18 people bidding on it, that's not going to be an affordable home opportunity. You're looking for something where basically you're the only person bidding on the property. You want to have a very, very savvy realtor as a negotiator. Okay. But there are a lot of properties now where people are giving away 2%, 3%, and in some loan cases, you can get up to 6% of the purchase price as seller credit. And that can go towards your closing costs. Okay. So that's the second lever. The third lever that we have for affordable home ownership are your monthly payments. How much are you actually paying every month? So When we're looking at monthly payments for a mortgage, they include, sorry, your principal, your interest, your taxes, your insurance, and any HOA or condo fees. So, how do we lower your monthly payments? One of the best ways we can do it is to buy down your rate. So let's say that you're working with a lender, and the lender says that if you want to purchase this house with no points, and I'll explain to you what that means in a second. If you want to purchase this house with no points, you're going to pay 6.75% interest. However, if you want to get a 6.25% rate, we're going to charge you a little bit of extra money, and that's called points. And basically, 1 point means 1% of the loan amount they're going to charge you. And they actually charge you that at the closing table. So you have to bring more cash to the closing table. Now, you may be saying, but Cherie, I don't want to bring more cash to the closing table. Well, this is where your seller credits come in that we had talked about before, because you can see if the seller will pay for your rate to be bought down. So, again, working with a very, very good realtor who's a shrewd negotiator is going to be helpful for you. So, I will say this though, lowering your interest rate depending on what the purchase price of the house is and what the loan amount of the house is, it may actually not lower those payments significantly. It may only lower them 20 bucks a month, 25 bucks a month, 50 bucks a month maybe. So what else can we do in order to really get a good discount on your monthly payments? Well, one of the things that we're able to do is sometimes if you don't put down 20% on your property, then you're charged something called mortgage insurance every month as part of your monthly payment. And I've seen mortgage insurance be as much as $300 a month for certain houses. So, just to give you a little backdrop, I just did a loan estimate for a borrower who is buying a house, and the house is 345,000, and she's going to pay about $136 a month in mortgage insurance. Well, based on the type of mortgage that you get, we could set it up where we could eliminate that $136 a month, which would then lower her mortgage payment. So, another thing that could potentially be done with regards to affordable home ownership is the seller could potentially pay your first three mortgage payments. And without getting super complex, you would have to come to somebody like me and ask me for this to be done like early on in the process. But remember those seller credits that you get. What we could potentially do is set it up so that the seller takes those seller credits, and those seller credits go towards your first couple of mortgage payments. So that gives you a chance to get into your house, move in, get some furniture if it's needed. I know when I moved into my house, one of the things that like had my eyes popped open was the cost of the garbage cans that I had to buy. So, yeah, so this could be a great way for you to be able to get into the house. You know, you just put a bunch of cash down in order to purchase the house. So maybe you want to do a little bit of saving, things like that. That is a great way for you to consider making that more affordable. The next thing, you can house hack as well. So, my mom and I happen to live together. You could live with family, for example, split the bills. You can live with a roommate. One of the things that I learned from one of my favorite realtors out there, his name is Mike, is that as a woman, I can, if I live in the house, I can say I only want to rent to other women. So, because sometimes safety is important. You may also choose to buy a 2 unit or a duplex and rent out 1 unit and live in the other. I have a friend in DC that's what she did. So, house hacking could be a great way for us to reduce that monthly mortgage payment. Final takeaways for everybody with regards to affordable home ownership. There are three levers that we're looking to maximize or minimize with regards to the cost in order for you to have that affordable home you're looking for. That's the down payment, the closing cost, and the monthly cost. And I think I gave you some really good tips and ideas for you to be able to minimize all three of those costs. So I am the Money Lady. You can find me at CherieTheMoneyLady.com, or you can call or text 571-583-4600. So thank you so much. And I will talk with you after the holidays. Take care. Bye.